Let's talk about Halliburton. We just saw a nearly 12% jump in a single day. I mean, that is a massive move. So in this explainer, we're going to break down the technical signals behind this huge breakout and try to figure out what might be coming next. So check this out. On October 21st, Halliburton, ticker HAL, didn't just climb, it absolutely exploded. We're talking about it rocketing up almost 12% in just one session. Yeah, a move that big definitely gets your attention. And to put it simply, this stock didn't just kind of edge higher, it completely shattered its recent trading range, and with incredible force. That right there is a signal of a major shift in how the market is feeling about this stock. Look, a big one-day pop is great, right? But as traders and investors, what we really need to know is, does this thing have legs? So let's dive into the charts, let's get into the data, and see what it's really signaling about Halliburton's future. Okay, first up, let's zoom in on the breakout itself, just so we can really appreciate the sheer scale of what happened here. So picture this. The stock closes one day at 22.62. The very next day, it blasts to a high of 25.24. A gap up like that isn't just a small gain, it is a powerful statement. It's buyers basically screaming that they believe the old price was just plain wrong. And, this didn't just come out of thin air. It was really the explosive finale to a 35% rebound that started all the way back in August. So what you're seeing is months of buying pressure just building up, and then boom, it finally broke out. Okay, so let's dissect this thing. We're going to look at the two most important components of any major breakout. You guessed it, price and volume. I mean, just think about the sheer firepower behind this move for a second. Over $1 billion worth of Halliburton stock traded hands in a single day. That's not just a bunch of retail traders nibbling. No way. That's institutional money making a huge, confident bet. And here's the proof. The stock normally trades around 18 million shares a day. On breakout day, that number just exploded to nearly 40 million. In the world of technical analysis, this is exactly what you want to see. It's called confirmation. The high volume is validating the price move, telling us that it is absolutely legitimate. The source material really puts it perfectly. It calls this conviction buying. And that's exactly what it sounds like. It means the big players, the large funds and institutional investors, were stepping in with serious capital because they believe the price is going to head significantly higher. So we've got price and volume perfectly aligned. Now it's time to pop the hood and look at the engine, the technical indicators that measure the momentum and the strength behind this whole trend. First up on our dashboard is the Relative Strength Index, or RSI. The easiest way to think about it is like the tachometer in a car. It tells you how fast the price is moving and whether it's getting into the red zone on either the overbought or oversold side. And here's the simple guide. An RSI reading over 70 is considered overbought, which suggests a stock might be getting a little bit overheated. Below 30 is oversold, which could hint at a potential bounce. Anything right in between, that's neutral territory. So where does Halliburton land? It's at 64.60. Now that's a strong reading. It shows some really powerful bullish momentum. But, and this is important, it is not yet in that danger zone above 70. This suggests there could still be plenty of room for this stock to run. All right, next up is the MACD. If RSI is the tachometer, think of the MACD as the GPS. It helps confirm we're on the right highway, and it shows us just how strong the trend's momentum is. And it does all that just by comparing a short-term trend line to a longer-term one. So HAL's MACD is just barely positive, which is a good bullish sign. But the really subtle clue here is in the histogram. You see, it was negative, but it was contracting, it was getting smaller, and that often hints that the downward momentum is fading away and a buildup of positive momentum is about to take over, which is exactly what happened. So with the price, the volume, and all the indicators pointing in the same direction, let's see how this all translates into a few potential future scenarios for the stock. Based on all the data, the analysis outlines 3 possible paths forward. The most likely, with about a 55% probability, is a bullish continuation. Next up, there's a 30% chance we see a period of neutral consolidation. Just some sideways movement. And finally, a bearish pullback is seen as the least likely outcome, at just 15%.
And these right here are the key price levels to watch. For the bullish momentum to keep going, the buyers need to push the stock above 25.76. On the flip side, though, if the price breaks down below 23.78, well, that would be a pretty good sign that the bears are starting to take back control.
All right, so after looking at all of the evidence, what is the final takeaway from this whole technical deep dive? The crucial point is this. We have a clear trifecta of positive signals. The price action is strong. The massive volume confirms there's real buying interest. And the key momentum indicators like the RSI and the MACD are all pointing up. This quote from the source report really just sums it up perfectly. This wasn't just some fleeting spike in the chart. No, this was a really significant event that has breathed new life into Halliburton's uptrend, and it's put it right back on the radar for any trend-following investors out there. And that leaves us with one final thought. The technical picture is clearly bullish. I mean, the charts are pointing higher. But the ultimate question is whether the company's fundamental performance, we're talking earnings and outlook, will provide the fuel to keep this rally going. That is the next piece of the puzzle to watch.